Hello aspirants, welcome to La Excellence. Welcome to the session on Current Affairs for Beginners. In this session, I am going to tell you about the terms, concepts, schemes and institutions that appeared in today's newspaper, that is 29th June 2018. Let me give you the answers for yesterday's questions. The first question is, which of the following institutions release the report Financial Stability Report? This is released by Reserve Bank of India, so the answer is B. The second question is, consider the following statements regarding Ujjwala scheme. The first option is, this is the first welfare scheme implemented by Ministry of Petroleum and Natural Gas. And the second option is, the scheme motive is to provide free of cost LPG connections to every household. The first statement is correct because this is the first welfare scheme implemented by Ministry of Petroleum and Natural Gas. And the second statement is wrong because this is to provide free of cost LPG connections to all women of BPL families, that is below poverty line families, and not to every household. So the answer is C, only one. The first article is Indian money in Swiss bank surges. In this article, it says that Swiss National Bank shows some data. Before this, there was an agreement between India and Switzerland for automatic exchange of information to curb black money. What is black money? This is income either illegally obtained or this is income that is not declared for tax purposes. And government has taken 10 major steps to curb black money. And the first step is, it constituted the Special Investigation Team for investigation purposes on black money. And the second one is, it enacted an act, that is the Black Money Undisclosed Foreign Income and Assets and Imposition of Tax Act 2015. And in this act, it specially deals with the black money that is stayed away from the country, that is the black money that is in abroad. It deals with that black money. And the third one is, it constituted a multi-agency group, and this group deals with Panama paper leaks. And the fourth one is, it proactively engages with the foreign governments and it facilitated the exchange of information under Double Tax Avoidance Agreement. What is this Double Tax Avoidance Agreement? This is basically an agreement between two countries. Let's say India and another country B. If a person who is resident of India but working here in this country, he have to pay tax here for his income, and he also have to pay tax here. But with this agreement, he can avoid paying double taxes and he can pay in any one country based on the agreement. And the fifth one is the signed Multilateral Component Authority Agreement, that is automatic exchange of information, that is Multilateral Component Authority Agreement on automatic exchange of information. And this agreement was shared between India and Switzerland so that they can allow the automatic sharing of tax related information, and both the countries can help each other in curbing the black money. And through this agreement, it was saying that Switzerland released some data regarding the amount of Indians hold in Swiss bank accounts. And the sixth one is, they are renegotiating this double taxation avoidance agreement with other countries so that they can bring this exchange of information to international standards. And the seventh one is, if any proceeds of crime or crime is taken outside or is held outside the country, now they will confiscate his property equivalent to that value in our country. And for this, they have amended the Prevention of Money Laundering Act 2002 through this Financial Act 2015. And the eighth step they have taken is enactment of Benami Transactions Prohibition Amendment Act 2016. And this is to confiscate the Binami property if they found it, and they will prosecute the Binamidar and the beneficial owner. And the ninth one is they have initiated an information technology based project, that is Project Insight. This is for strengthening the information driven approach for improving tax compliance. That is, in this, they will, by using data mining or data analytics, they will see in social media platforms how the person is spending. By using social media, they will able to understand what about his position, that is how his income is, how his spending pattern, and they will check the income declaration given by him in the tax office, and then they will compare these two, and based on that they will take action if necessary. And the 10th one is Operation Clean Money. During demonetization period, if there is claims of any excessive cash sales, and under this operation they have identified some persons and they have investigated them. Next article is sinking rupee. Sinking rupee means depreciation of a rupee. Depreciation of a rupee means the fall in the value of the currency in a floating exchange rate system. And the appreciation of currency means increase in the value of currency. Depreciation means decrease in the value of currency. What is the effect of this depreciation and appreciation? It has most of the effect on imports and exports of the country. Let us take this example. Here Indian rupee is depreciated. Now let us see what is its effect on imports. That is, before, for $1, that is $1 is equal to 64 rupees. Now approximately $1 is equal to 69 rupees. That is, the value of rupee is decreased. And now to import any machinery, that is, suppose if a machinery costs $100, to import this, before we just need 6,400 rupees, and now to import the same thing we need 6,900 rupees. That is, the cost of import of a machinery increased, and subsequently we import less things. And let us see what is its effect on export. Before we export one machinery that is also costing $100, then we get 6,400 rupees. But now if we export one machinery of $100, we'll get 6,900 rupees. That is, if we export any goods and services in the time of depreciation, we'll get more money. That is, in the time of depreciation, exports increase, imports may decrease. And let us see what are the reasons for depreciation of the Indian rupee. Presently, there are 3 reasons for the depreciation of Indian rupee. The first reason is increase in the import of crude oil prices. And the second reason is global trade war. And the third reason is rising of US interest rates. And these 3 resulted in inflation, and this resulted in current account deficit. And let us see what is this current account deficit. This comprises of 3 factors, that is trade deficit, factor income, and the third one is financial transfers. Trade deficit. If the total value of the nation's imports exceeds than exports, then we say there is trade deficit. And the second one is factor income. This is the difference between the income generated by the foreigners in our country and the income that is generated by our citizens in foreign country. And the third one is financial transfers. This include foreign remittances. What is this foreign remittances? If a person earns in one foreign country and he sends back his earned income to the to his own country, then we call this income as remittances to this country B. And thus, current account deficit consists of trade deficit, factor income, and financial transfers. And the next article is listening in. In this article, we have to see right to privacy. Right to privacy is an inferred right under Article 21. Let us see what is this Article 21. This is protection of life and personal liberty. And this article states that no person shall be deprived of his life or personal liberty except according to the procedure established by law. Let us see what is this inferred rights. First, Supreme Court has taken the narrow interpretation of Article 21, but later, through several cases, it widens the Article 21 and several rights were inferred under this Article 21. And some of those rights are right to live with human dignity, right to decent environment, right to speedy trial, right to livelihood, right to privacy, right to shelter, right to health, and right to free education up to 14 years of age, right to free legal aid. And the next one is old versus new. In this article, it was mainly saying the differences between Higher Education Commission and University Grants Commission. This University Grants Commission is a statutory body that will look after all the existing universities in the country, and now the government has decided to replace this University Grants Commission with Higher Education Commission of India. Here they were saying what are the new changes or the differences between the University Grants Commission and this Higher Education Commission of India. This commission, that is University Grants Commission, gives grants to central institutions, whereas this institution, that is Higher Education Commission of India, has no power to give grants, and now this work of dispersal will be taken by Ministry of HRD. And the second difference is to give any financial needs or to give the standards of the teaching in an institution. This UGC used to conduct inspections, but here in HECI there is no inspections. It will prescribe some norms on academic performance by higher education institutions. And the third one is, if any institution contravenes with the regulations that is given by the UGC, it has the power to terminate the affiliations to colleges to universities, or it can withhold the grants to universities that is given by it. But in HECI, it can even shut down the substandard institutions. Before, this power is not there with the UGC. Try to remember these three differences so that if they ask you about HECI, that is, if they give you the three statements and ask you select the correct one, you can answer this. Try to answer today's questions. The first question is, the term current account deficit includes. And the second question is, UGC works under which of the following ministry? Thank you.